I have this theory that the market is all about momentum. And that momentum will tell you if you are likely to lose the trade, if you're more likely to win the trade, or even if it's going to be a consolidation. Now, this is then told through the different signs of momentum and disturbance in momentum, but that's all things that we're going to dive into in just a little bit. First, I need you to understand that there are 5 different types of trends. And these 5 trends are based on how much momentum we have. Let's first understand at its core, what do I mean with momentum? Momentum to me is how fast we move towards one side of the market. And then I like to state momentum in the form of percentages. So think of it, the way I think of it is like a scoreboard. And the total of the scoreboard always amounts up to 100%. On the left side of the scoreboard, you have the bullish side. On the right side of the scoreboard, you have the bearish side. Now, the first type of trend we then have is a breakaway gap trend. And a breakaway gap trend is where the scoreboard is very uneven because we have one side having 100% and the other side having 0%. So if we are 100% bullish, for example, then that leads to something as the following, like we see right here. That leads to a breakaway gap trend where every fair value gap that we create becomes a breakaway gap. And this is simply because the bullish side is so strong and the bearish side doesn't have any momentum, so it's also not able to create a retracement. Now then the second type of trend is where it's a little bit more even and a little bit more ideal, in my opinion. It's where, for example, the scoreboard is 90% bullish and 10% bearish. And what this leads to is a fair value gap trend. So we are still very much bullish right here, but now since we are also 10% bearish, that 10% allows us to create retracements back into fair value gaps, but only stings back into fair value gaps to then continue higher again. Now, the third type of trend is the one in the middle. And that's where the momentum against us is a little bit stronger. And due to that, we create deeper retracements. And what that looks like is, let's say, 75% bullish and 25% bearish. That might result in a fair value area trend where we don't respect the initial fair value gaps that we have, for example, right there, but we do retrace a little bit deeper back into the fair value areas and we respect those fair value areas to then continue higher. And that's simply because there's a little bit more momentum against us. And the fourth type of trend is very similar to a fair value area trend, but slightly different. And that's because we might be 60% bullish, but 40% bearish. So there's quite a lot of momentum going against us. This is where we are not necessarily respecting fair value areas, not necessarily respecting those fair value gaps. We have very deep retracements before we continue higher. So it looks like a consolidation, but we are overall still continuing higher. This is what we call a consolidating trend. And the reason why it's quite an ugly price delivery is because it's very close to the last trend, which is not necessarily a trend, is where the scoreboard is 50-50. So you are 50% bullish, 50% bearish. That, of course, leads to a consolidation. And a consolidation is then slightly different from the consolidating trend because the consolidation is not actually moving anywhere. So the bullish side nor the bearish side is strong enough to push price higher or lower. So we stay in essentially the same spot right there. Now the two extremes, so the consolidation and also the breakaway gap trend, are not necessarily ideal. Now in our 5 type of trends, there are 2 trends that are ideal. And that's a fair value gap trend and a fair value area trend. A breakaway gap trend is only really good when you're already in a trade because 100% momentum in your favor also doesn't necessarily allow you to get very easily involved in a trade. With a consolidating trend, you might get taken out of the trade before it even moves to your take profit. And in consolidation, it's not going anywhere. So having the right amount of momentum in your favor and against you is ideal. So finding a balance in that. And that's where the ladder of momentum comes in. Because these 5 type of trends, I want you to see them as a ladder. And every time we are, for example, in a fair value area trend, we are one sign away from reaching a consolidating trend or even a fair value gap trend. So one step up the ladder. And if we go up or down the ladder of momentum, that is then seen by disturbance in momentum, and which are essentially the signs that we have, that we see that momentum is being disturbed. So we are going up or we are going down the ladder, and that we might be changing the trend that we have. So for example, if you see a fair value gap trend, but all of a sudden it turns into a consolidating trend, you might not want to get involved anymore. So you can avoid losses. So our next step is to understand fully what the signs are of that disturbance in momentum. Disturbance in momentum at its core is essentially momentum all of a sudden going against you. So let's take a look at the dollar right here. Then we see the dollar is respecting this bearish fair value gap right there and is simply continuing lower overall. Now in the most recent candle, we see a long wick right here. That long wick is what we want to watch out for. Why? Because again, momentum is simply said how fast we are moving towards one side of the market. And how can we determine how fast we are moving towards one side of the market? That's told by fair value gaps, because as we see in factual price action right here, every time we are moving lower or we are moving higher and we are moving fast, that is told by fair value gaps, either bullish or bearish fair value gaps. So those fair value gaps, they tell us how fast price is moving. In other words, again, momentum. Now you might say this singular candle doesn't have any fair value gap, right? Well, fair value gaps are also within singular candles, because when you have a long wick right here at the bottom, for example, and if we were to go from the weekly time frame to the 4-hour time frame, then you'll see that long wick is essentially just this price action. First fair value gaps going lower to then fair value gaps going higher right there. So when you're looking to take a bearish trade ID, all you want to watch out for is that you might have disturbance in momentum towards the bullish side. So if there's a lot of bullish momentum coming into the market, then you want to be a bit more careful. And vice versa, if you're looking to buy in a bullish market, then what you want to watch out for is bearish momentum entering the market. So this long wick right here is a lot of bullish momentum entering the market in overall a bearish market, where if we go down a time frame, we would like to see lower prices from, for example, this fair value gap right here. And where we also have the fair value area. So you can already notice, because we have so much momentum coming into the market right now, we previously had just a sting back into this weekly fair value gap to continue lower, where we could argue that's a fair value gap trend. That now turns into, because we had such a long wick and bullish momentum coming into the market, it turns into potentially a fair value area trend to continue lower. So this bullish momentum entering the market, that disturbs the overall momentum, hence the name disturbance in momentum. And the reason why this is important to understand is because when we then see this retracement back into this fair value gap and fair value area, you can't simply expect price to stop right there and reverse. The same as when you are driving a car and you are going 100 miles an hour or 100 kilometers an hour, then it takes a while from the moment you press your brake fully until you fully get to a stop. So 0 an hour. And once you're at 0 an hour, only then can you fully reverse. It's the same in the market, where when we have a lot of momentum coming into that fair value area, you can't expect price to simply sting into it and reverse. No, it will take a little bit longer before it actually fully reverses. And that is because it has that disturbance in momentum. So that might lead to, if we go into the lower time frame, first seeing somewhat of consolidating price action right here before we actually start to continue lower right there. And this is exactly what we're trying to avoid, where you might take a trade like this from a fair value gap, where at first it's your stop loss, but still overall moves in your favor. So only when we can now confidently see and say as well that we are simply having that momentum back into our favor and we are respecting those fair value gaps right there, where we can recognize this is a fair value gap trend at this moment in time, that's when we can potentially look to trade from this fair value gap to then continue lower right there. Now, understanding the disturbance in momentum is also a little bit about understanding what should happen in the future of price action. Now, that's a mouthful. It's not that difficult, I promise you, but you should essentially think ahead. So if we, for example, look at this price action right here, then this, in theory, right, if the bearish momentum is truly that strong, it should become a new fair value gap. Now, depending on if the bearish momentum is really strong, it can become a breakaway gap to continue lower, or a fair value gap to sting into it to then continue lower. So when this happens right here, we don't create the fair value gap, and instead we sting into a higher fair value gap right here. Then this is not just a normal sting back into a fair value gap to then continue lower. No, it's also disturbance in momentum. So that doesn't mean that we can't continue lower at all, but that does mean that on the lower time frame, you will see price will struggle a little bit more to continue lower, will consolidate a little bit more right there, to then potentially continue lower right there. Then this is the momentum theory. Now, a new MMT module, Get Your Edge, is coming up very soon. So if you're interested in that, feel free to check the link in the description. Also, we have a new YouTube series coming up very soon as well. All right, perfect. Thank you.